And just last week, Twitter celebrated its 6th anniversary, the 6th anniversary of the first ever tweet. Despite numerous management shakeups, the company has now grown to 100 million active users. And my next guest says this is just the beginning. I'm joined now by Peter Fenton, general partner at Benchmark Capital and an early investor in Twitter. He also sits on the board of Twitter and Yelp, among other hot companies. Great to have you back.
It's great to be here.
So you said that Twitter, the breakthrough of Twitter defined 2011. What does Twitter need to do to take advantage of that in 2012?
Well, I think there are two misperceptions in the mainstream media about Twitter that need to be addressed this coming year. The first is that it often gets lumped into the same category as social networks. And we talked last year about Twitter being an information utility. It's not a social network in the sense that it's not few-to-few communication. It's one-to-many broadcast. And so I think you'll see in mainstream media that the presence of tweets all throughout major events, to name a few, the Oscars, the NBA, and that's just part of it being an information utility where you're not sharing amongst your friends. The second thing, and this is the profound, even deeper issue that people, I think, have in the mainstream media, is that there's a perception you have to tweet to use Twitter. And there's 340 million tweets per day. And the power of Twitter really is as a discovery engine, getting you connected to and bringing you closer to the information that you're most interested in seeing. So to really get to the next level, I think you're moving through that classic technology adoption curve where we've worked through the early adopters and now are moving to the early majority, which is really the next 40 to 50% users.
So you think the next hundreds of millions of users won't use Twitter to tweet, they will use it to read, to get their news and information?
Exactly. I think it's establishing its brand and as a mobile product, a fundamental way to get connected to stuff, the serendipity of life. And the simplicity of the product really stands and sets apart from the other social networks. There's the beauty of not just the feed, but the fact that the company's ad model is a part of the endemic organic usage of Twitter is a major component of 2012. So if you look at a tweet is also an ad, and it can be interacted with, retweeted, favorited. And this is the first fundamentally new ad unit we've seen since, I would say, AdWords, back in the Overture, first pioneer it, but then Google to emulate.
How are the promoted tweets working out as a revenue model? Are they bringing in the money that you guys expected?
We can't disclose what the numbers are, but I can say that we're astounded at the performance. 3 to 5% engagement rates on an ad unit is orders of magnitude greater than what you see on a traditional banner ad. And I think what people are realizing is it's not about bulk. If you talk about the size of Facebook and say, well, see, Twitter's only a fraction of the size, you miss the point that as a broadcast network, a promoted tweet can get fanned out. It can show up all throughout the internet. And there's an amplifying effect because the users of Twitter have a dominant share of voice. They're the influencers. They're really where the conversation gets started and shaped. And
you think Twitter could grow to 4 billion? Really?
Well,
I know you don't like the comparison to Facebook, but that is 4 times the size of Facebook.
Anything's possible. And what I think when you ask the question of how big Twitter can get, I think you have to say, what's the medium in which it gets consumed? Twitter was founded as a mobile company, 140 characters, which links to the size of text messaging limits. The natural handset market size, 4 billion, I think the company's not going to project that it can win in China. But why not, if you think about the utility it brings, aspire to the natural size of the network, which is 4 billion.
Now, talking about the size of Facebook, the IPO is coming up in just a few weeks, potentially. A lot of momentum there. But you think that Facebook's peak is behind it. Why?
I wouldn't say that exactly. I think Facebook's been able to build a very big, profitable business and is going public, not in its early life, but I would say in its middle life. And there's all sorts of opportunity ahead for Facebook. But I think the fundamental question an investor has is it 10x from here? Or will they see more of a modest growth in both the appreciation of the equity, but the user base? It's hard to go from 800 million to 8 billion. So I think Facebook has a number of interesting questions it has to wrestle with, mobile being one of them. How does it monetize on mobile? Then there's the other issue, which we're seeing in our market, of the verticalized social network.
Right.
And you see sites like Nextdoor They're carving out pieces of a social network that's less about your friends and more about a different part of your life.
You guys also invested in Edmodo, an education network. There's Instagram out there. So that's the question. Are these vertical networks going to migrate away from the social network?
Well, I think it's a question that an investor has to ask. We're empiricists, so we look at the data. And the Facebook platform brings immense value to its users. It has a core mission. I think that core mission is centered around friends and people you know. You take Nextdoor, Edmodo, these are two emergent social networks that are not centered on friends. Nextdoor is centered on the people that are in your neighborhood, and there's a different set of information you want to share. You don't want to share information about the party you were at last night. You want to know if there's meningitis in the neighborhood. You contrast that with Edmodo, you care about what the teacher thinks about your student, and that's quite separate from what you might use Facebook for.
Now, as an investor, I was speaking with Mark Andreessen about this a couple of weeks ago. There are more mutual funds, more hedge funds investing in consumer technology. For them, Mark said they're putting a pause on late-stage deals. What does that mean for you guys? How will that impact where you invest this year?
Well, we don't believe as Benchmark, our role is to be a growth investor, an angel investor. We try and invest early, go on a board, be deeply committed. So we never participated in the growth investing phenomenon. I think it's going to get pressured by public IPO pricing. And so the question is, does that window between late stage and before you go public collapse? And the Facebook IPO, I think, will, as Yelp and Zillow and others prior, show that you can, in fact, go public and maybe get a higher price than you would get in these late-stage rounds. And then some of these late-stage rounds, I think, are going to, by the investors, be viewed as overpriced. And that feedback loop is coming. Zynga went public at a price lower than the last private round, and I think that sent a shockwave into this ecosystem of they don't necessarily get a free big return by simply buying an illiquid security early.
Mm-hmm. Yelp's actually up 87% since its IPO, we should mention. But this means that more venture capitalists are going to be looking at early stages where you are and where you guys have typically looked. That means more competition. So how do you distinguish yourselves? Distinguish yourselves to entrepreneurs and get into the hot companies.
Well, we love competition. I think it makes us better. The primary thing which we urge entrepreneurs to do is to reference us. And I think a venture firm, it's like hiring an employee because you serve on a board, you try and help the company and build value. And competition, when it's based on how does that firm actually operate in good times and bad, I think separates out quality from lack of quality. And ultimately, we don't obsess on competition. We obsess on the emergence of the next Jack Dorsey, the next Jeremy Stoppelman. And we believe very deeply that those people are waiting. They are being hatched. Y Combinator just had their demo day yesterday with 60+ people of that quality. So there's an ample supply, and we welcome the competition.
Finding the next Jack Dorsey. Everybody wants to know where he is. All right, Peter Fenton, General Partner at Benchmark Capital. Thanks for joining us here.